All right. So our lesson number 1. So lesson number 1 has 2 lessons: market structure part 1 and part 2.
Okay.
So today we're going to do part 1. So and I'm going to record it, then I will send it to you later so you can watch it when you're free. All right. So for market structure, right, that's like the foundation, like just like building a house, you need to put a foundation. That's the foundation. So when the market is moving, it's either moving up, down, or sideways, right? I think you've seen that. That's how the market moves, either going up or it's going down or it's moving sideways. Now, but even though it's moving up, it doesn't move in a straight line. It's moving like this.
Okay.
Now, that's how the market is mostly moving. Okay, if it's moving down, it's moving like this. And if it's moving sideways, it's like this.
When what's going on? Why it's moving sideways and upward and downward?
Okay, we'll talk about that later. We'll talk about that.
Okay. Okay.
So let's begin with the uptrend. All right. So when the market goes up here and comes down and then goes up, so this is what we call a high, right? This is a high. How much time do you have?
Me?
Yeah.
Plenty of time.
All right. And then this is a low, right?
Okay.
So this is a high, this is a low. And then right. So this is what you call what? A higher high. Okay. Why is it a higher high? This high is higher than the previous one.
Oh, okay. I thought
That's
so.
why it's a higher high, right? Then this is a higher low, because this low is higher than the previous low.
Okay.
Yes.
Makes sense.
So when the market is moving up, it's making higher highs, higher low, higher high, higher low. That's how the market moves in an uptrend. So this will be a new higher high, new higher low, new high, new low, new higher high, new higher low. So this will be like so the abbreviation is just HH: higher high, higher low, higher high, higher low, higher high. So that's how the market is moving in an uptrend.
So that's how I would mark it.
Yes.
HH
Yes.
and HN. Okay.
Yeah. So you don't really need to write the whole these 2 words. Just put HH.
Okay.
Yeah.
Much easier. Okay.
Yeah. So as long as they are breaking these old highs, the highs, these ones,
okay.
Price is moving up, is in an uptrend. It's going up.
What happened if how come the lows is not being break?
Because that's what you call an
up?
uptrend. Yeah. So whenever we're in an uptrend, they're mostly breaking the highs.
Okay.
Yeah, they're breaking the highs in an uptrend. So let's go back. So this will be the so this was the higher high. This is the higher low. Now this part here. This part. Okay, this part here, where they break the old higher high. This is what you call the BMS. BMS, okay, meaning break market structure. Break market structure. Okay, break market structure. So what? Okay, so before I go there, so what you need to do is whenever you have a new higher high here, this one here, you need to take your trend line, those 2 trend lines, and you mark that high. And you mark the old higher low. So this is what you call your range. That's your range. This is where we are right now. Our trading range.
Trading range. Okay.
Yes. Then price comes down to make a new higher low. And then here they break market structure. Break market structure.
So that would consider the BMS, and they will form the higher high.
Yeah, they're going to form a new higher high.
Okay.
Yes. And then so now this part, you only need to erase this part here.
Oh, and move
Yeah.
those.
Just leave the part of the BMS. Yeah.
Okay.
And then when they make a new higher high, again, you need to mark the new range. This is our new range now. The new range. It's no longer this old one. It's the new one. This. Yeah. Then again, price comes down, makes a higher low. Then they break structure again. This is another BMS.
Okay.
Yeah, this is our BMS. Okay. Now, oh, I forgot. Now, these higher highs, higher lows, what are we looking for? Okay, since if we go to a chart, the chart looks like this. Okay, looks like this with candles. So what are we looking for? What is a higher high? What is a higher low? So it looks like this. We are looking for this. We're looking for a 3-candle pattern. Okay, so a higher low, these higher lows, these ones, higher low, they look like this.
Okay.
There's a 3-candle pattern, where the middle candle is lower than the other 2 candles.
Okay.
Yes, that's what you call a higher low. These higher highs here, these higher highs, they look like this. It's a swing high. It's called a swing high. Okay, it's also a 3-candle. They're all 3-candle patterns. 1, 2, 3. The middle one is higher than the other 2.
Okay.
So now there can be any shape, any color, but as long as they are, it's a 3-candle pattern.
Okay.
Okay. This one can also can even be long up to here. Doesn't matter. Okay, as long as it's a 3-candle pattern.
As long as the middle is either high or low.
Yes.
Okay.
All right. For example, here, so let's say this was an uptrend. This would have been the what? The higher high here. 1, 2, 3. Then price comes down, makes a higher low. 1, 2, 3. Right?
Okay.
So which means you would have what? This would be you mark this is the high. And maybe this was the old higher low. The old higher low down here.
Okay.
Okay. Then price goes up, and then this is our BMS. They break the old high, this one.
Okay.
That's a break market structure. So which means this here becomes the new higher low.
Okay.
The new higher low. Yeah. So that's what you're looking for. So higher highs, higher lows, even in downtrend, this is what we look for. 3-candle pattern. Right. Now, also, what is a BMS? What is a breaking market structure? How does it look? How does it look? So it looks like this here. So if I can zoom in on this chart. So do you see this swing pattern here? This swing high here. 1, 2, 3. This is our higher high. Can you see it? Do you see the, yeah, all right. Price comes down, they make a higher low. This one higher low. 1, 2, 3. The middle candle is lower than the other 2 candles.
Okay.
Price goes up. Here, this is what you call the BMS.
Okay.
The break market structure. So what is a clear break market structure? The body of the candle has to be above the old high.
Oh, the body. Okay.
Yeah, not the wicks. These are the wicks. Okay, those small lines that we see there, those are what we call wicks.
Okay.
Wick, yeah. So we don't consider the wicks as the BMS. A BMS is when the body of the candle, this one, the big part here, is above this old high.
Okay.
That's a clean close above. That's a clear BMS.
Okay.
Okay. Whereas if we look down here, okay, this was a swing high. 1, 2, 3. Price did not close above. The body is not above.
Is that still okay?
No, it's not a BMS.
It's not.
It's not a break market structure. It can either mean 2 things. Either price is now moving sideways.
Okay.
But I'll explain that later.
Okay.
So this is not a BMS. So as long as you don't see a clean close above, this is still our higher high. It has not changed. That is still your higher high.
So once the body hits that BMS, then it's considered forming a new higher high.
Yeah. So yes. So if price closes above, then it means they are now going to make a new higher high.
Okay.
But if they fail to, yes.
Okay. If it's like that, then if it's failure to close above, then the first higher high, no matter how many times it hit that line, the first one will be always higher high.
Yes.
Okay.
All right. So let's look for an example here of a higher high. All right. So you can see this one is more clear. So as you can see, right, price goes up and makes a new high here, swing high.
Okay.
That's the higher high. Now, if you look back, if you look back, there was this swing high here. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. These were all swing highs also. Okay. But these swing highs did not change the direction of the market. Okay? But this is the one, this was the last one to change the direction of the market. Okay. So we always want the last one.
Okay.
The one where the trend actually changes from up to down.
Okay.
Okay. These ones never changed direction. There was no change of direction here with these ones. So that's why we don't use these ones. But this was the last one where the trend changed to now come down. Yes. Right. And then if you see here, even this downtrend here, there was a swing low here. This was another one. 1, 2, 3. Okay. 1, 2, 3. But these two, they never changed the direction to go up. The only one that changed the direction was this one. This was the last one where price actually started to change direction. So this is now the right higher low.
Okay.
The correct higher low. Even here, when price was going up, there was this and this and this and this, but they did not change the direction of the market. It was only this one that changed the direction. So that's the one we want, the last one.
Okay.
All right. So as long as price is moving up, so this was the higher high, right? The new higher high here. High, higher low. Right, this is the BMS. Then, so sometimes I see that some students, when they make a mistake where they forget to erase this, right? And then when price comes down, then they say it's a BMS again. No, it's not a BMS.
Okay.
It's not a BMS. So that's why whenever you see the BMS, you need to erase this. You don't need this anymore.
Okay.
The only one that you want is this, the one where it led to the BMS, this one only.
Okay. Yeah. Okay.
Then when they make a new higher high, you need to mark the new range now. The new range is this high and this new low.
Okay.
Yeah. And then price comes down, higher low, and that's how the uptrend is. That's how the price goes up. Right. So as long as price is breaking the highs, the higher highs, price is in uptrend. It's going up. We buy. We are only buying. Where do we buy? We are buying on the higher lows. These ones. That's where we buy. But we'll talk about buying later. Right now, we are still know on the foundation and how does the market really operate. Yeah. So we buy. So whenever price is going up, we buy on the higher low. On the higher low. Now let's go to the downtrend. Right. So this is our low. This is our high. And this was also the BMS. So this is what you call a lower low. This one. Lower low. Why? Because this low, this new low is lower than the previous low.
Okay.
So that's why it's called the lower low. Then here we have a what we call a lower high. Why? Because this high here is
high.
lower than the previous high. Yeah, so
Okay.
that's why it's called lower high. So when the market is going down, it's making lower lows, lower highs. So it's just LL, LH.
Okay.
LH. Okay. The BMS is same as the uptrend. It has to be the body of the candle here.
Okay.
Yeah, it should be the body. BMS, these are all the BMS here. Okay, so as long as price is coming down, they are making lower low, lower high, lower low, lower high, and they are breaking the laws. Okay, in a downtrend, they are mostly breaking these laws. That's what they are breaking. They're breaking all these laws here. They break it here, they break it here, they break it here. So when you're in a downtrend, we are only selling. Where do we sell? Here. We're selling there. That's where we are selling only. When price is coming down, we're only selling.
So selling at the swing high? Is that
Yes,
what it is?
yes, it's a swing high.
Okay.
But it's actually called the lower, because it's a downtrend, so it's called the lower high.
Okay.
Yes, it's called a lower high. And we have this example here. So this same chart here, this one, the uptrend here, this one, the one that I explained. If we flip it, this is the downtrend. Okay, if we flip it, so same. There were these laws here, but these laws they did not change the direction of the market. This was the last one to change the direction. So that's our swing. That's our lower low. That's the official lower low. This one. Then price goes up. This could be lower highs, but they are not, because why? They never changed the direction of the market. So we want the last one. And the last one is this one here, where price now changed direction. Okay. Then this is the lower high. But when price came down to this old lower low, there was no this was not a BMS.
I have a question, sir. On the previous lower high, why would you circle the first one? Isn't it the next to it for the lower high?
Let's see.
Like on the right instead of the left. Why would be on the left side instead of the right side?
I think this was the big one, the last one. I can't see clearly between these two, but I think this was the last one. Okay, this one was higher than this one.
Okay, got it. Makes sense.
Now, when price came down, this was not a BMS. Why? Because this only a wick. We want to see the body.
Okay.
The body should close below this for it to be a BMS. Okay, so this is still our lower low. Our lower low is not changed. Then price goes up, and here that's when they broke market structure. So they can break market structure either with the candle or with a gap. This is mostly found on Monday when the market opens.
Monday. Okay.
That's where you see these gaps.
What's the gap used for?
It's usually sometimes when there's news on the weekend, right? Let's say there's news that's going to push price up. When the market opens, there's going to be a gap. Price will just gap up.
Okay.
Yeah. So yes, it's called an imbalance in price. But most of the time they'll come back to close it. Like you see what happened here. They came back to close the gap.
So that way there's no disconnect.
Yes. Yeah. So they came. So most of the time they'll come back to close it. Because the market never wants to leave. They don't want to leave gaps like this. So they'll come back and then they'll close it here. Now it's closed. And then they continue going down. So one thing that we cannot predict is what happens on Monday morning. You see, so when the market opens between Friday midnight and Monday morning, you can't predict what's going to happen there. So sometimes there can be big get, especially if there's news, high volatility news that happened on the weekend.
Okay.
Yeah. So if there was news from USA, that's going to make the dollar strong. On Monday, you expect price to gap up.
Okay.
So here, price came down. There was no BMS. Price goes up, and then this was now the BMS. But now let me ask you, which lower high broke market structure here? Broke this low? Was it this one or was it this one?
The the second one.
The second one, yeah. So this becomes our lower high because that's the one that led to the BMS, not this one.
Oh,
So sometimes we want the one that breaks market structure. We want the lower high that breaks market structure. We also want the higher low that breaks market structure here. If this one, that's one you mark. If price does this and breaks market structure here, which higher low broke market structure? This one or this one?
The second one.
Yeah, so that's the one you mark. That's the one you mark.
Okay. I have a question, sir. So on the swing low on the left side, since the wick didn't touch the line, so that the other one on the left side.
This one?
The left side. No.
This one?
That one. Yes. Since the wick didn't, or the body didn't touch the line, that wouldn't consider a BMS, correct?
The BMS of, because okay,
there's a line.
Which line?
There's a line here.
This one.
Yeah, that line.
Uh-huh.
So since that line, the body didn't touch the line, it's not considered a BMS.
Okay, this line was for this low.
Uh-huh.
So like this, if you make a low here, then I mark this low like this. So if price comes back and they break it, that's my BMS of this low.
Of that low. Okay. I just got confused.
So here there was no BMS because there was no clean close below. There was no body below this low.
I got it.
Yeah. And then so that's how the market moves. So then lower low, lower high, BMS. As you can see, there was this low, right? But the last one was this one to change direction. That's the one we want. This is the low, lower high, BMS, lower low, lower high, and price goes down.
Okay.
So that's our downtrend. To show you a nice downtrend, this is a nice one. So clear. Right. Price came down. This is the lower low. Okay, this one. And then this was the old lower high. OH.
Okay.
OL. Price goes up. There were these ones, 1, 2, but this was the last one to change direction. That's the one we want. This is our lower high, our new lower high. Price comes down, and this was the BMS right here. The BMS. So this is the new lower high and the new lower low here. Price goes up again, and they make a new lower high. Then before they broke market structure, there was a new lower, there was another one here. So this becomes the lower high, okay? Which broke this market structure here.
Because so the first one didn't break the structure.
Yeah, the first one did not lead to the BMS, but this one led to the break market structure. So this is the lower high now. And then this is the BMS, then this is the new lower low. Our new range is this and this. Price goes up and make a new lower high right here. Price comes down and they hit a BMS here. So our new range is this lower high and this new lower low. Price goes up again, lower high, and then BMS here. So that's how the market moves in a downtrend.
Got it. It looks easy on your end.
Wait till you start marking the charts. Then you're going to see that. All right, and then now the last one is the sideways movement. So right, price goes up, higher high, comes down, higher low, breaks market structure here. They make a new higher high, right? and then you do your trend lines. You always need to know your range. This is my range, my low, my high. So as long as they're breaking the highs, we're in an uptrend. But if they break the lows, we are now in a downtrend. So then what happens? Price comes down to make a higher low. Price goes up, but there's no BMS. There is no BMS. Then price comes down again. So this is what you call a range. Price is moving sideways. So the most important thing in a sideways is this high and this low.
Okay.
As long as they are not breaking that low and that high, and they're just doing this, that's a range. Price is moving sideways. Okay, that's how the market moves. The market does not just go up. Sometimes they have to take a rest, right? And then they start to move.
That's what they're doing. They're just resting.
Yeah. So it's actually they are picking orders. They're trying to pick more orders into the market. But we'll talk about that in the future.
Like accumulate all the orders.
Yeah, accumulating orders, and they're also building up liquidity. But we'll talk about that in the future lesson.
Okay.
Yeah. So as long as they are not breaking this high and this low, even if we have a wick here, but the candle is closed above, it's not a BMS. We are still in a range. Still in a range. Until you have a clear BMS. Then you can say, okay, that's the BMS. Then higher high, higher low, high, low, high. All right. Now, there's also something that we call, so sometimes you see something like this, where price comes down, higher low, then they break market structure, right? So what are you expecting now? We are expecting a higher low, then high, then low, then high. But something like this happens. BMS, price comes back and start to continue with the old range. What up? BMS. Right. So can you see this? Yes. So this is what you call a fake breakout. Or a fake BMS. All right. Why is it a fake breakout? Because they broke market structure and they came back and they continued with the old range. So that's why we call it a fake breakout, a fake BMS. So a fake BMS is when price breaks out of the range and they come back and continue the old range.
Okay, can it happen at the bottom too?
Yeah, it can. Same thing whether it's a downtrend or uptrend. Price can just do this. Then they break market structure. So meaning now, since they broke the low, we are now going lower. Then price comes back and they continue the old range again. This is what you call a fake breakout, fake BMS, fake breakout. All right. So with the ranges, the sideways movements, there are two types. Okay, there are two types of ranges. There is a clear range, very clear. And another one is not clear. Not clear. Right. So what do I mean? So like this high, low, high, right? This is your high, this is your low, and then price is just doing this. Right. This is not clear. Okay. When you see this, the only thing that you need to mark is this high, your high here and your low here. That's the only thing that you need. Nothing is clear inside this range. Then you have a clear range, right? A clear range like this. High, low. This applies to also a downtrend. This is the high, this is the low. Now a clear range is like this. This is what you call a clear range. Okay, you can clearly see this small downtrend here, and you can see the uptrend and the downtrend and the uptrend. You can see it's very clear. Okay, that's what you call a clear range.
Okay. So when you see like a stairway going up and going down.
Yeah. So you can actually see this small higher high, higher low, higher high, higher low, high, low, high, lower low, lower high, lower low, lower high, lower low, lower high. Whereas with this one, there's nothing like that. You don't see anything like that. So that's the only difference between the two, the ranges.
Okay.
Any questions so far?
None.
All right.
A lot of information.
All right. Now, so our strategy, right? The one that we trade, we are trading in line with the banks. Okay, the banks who control the market, or sometimes they call the market makers. We are actually trading in line with them. So we are studying their footprints. Then we trade in line with them.
Why is that, sir?
Okay, if I you know, when it comes to trading, right? What these guys do is their purpose is to get our money, right? I think you know that. That's their purpose,
Yes.
to get our money. And we are trying to get money from them. Okay. So what most of them actually did is the big guys who control the world, what they do is they actually create fake strategies. Okay. Fake strategies so that they can give people to trade. So those fake strategies, they only work here and there. And most of the time you're losing money. So they get our money. That's what they're trying to do.
I see.
But
Why I was losing before.
yeah, but there are some guys who were, the ones who were in the banks, right? They were trading there. They know how the market moves, how exactly it moves, what they do. And some of them, they got old and they shared the secrets to other people before they died. See? Because if they had shared the secrets when they are still alive, they would be sued. But I don't know how they did it, but before they died, they shared the secrets. Like, this is how the market moves.
Oh, that's good.
So those people now share the strategy to everyone. They actually, not for free though. Some people actually paid a lot of money for those strategies. It's a lot of money. Sometimes 50,000, 25,000,
Oh, wow.
Yeah.
That's a lot of money.
Yeah. So now that's one of the strategies that I use. I'm trading in line with the market. So I actually know how the market moves, what they're actually doing.
Okay.
So that's why I'm saying we are trading in line with the banks, with the market makers. All right.
Okay, got it.
So when price goes up, it makes a high, makes a low, makes a high. Do you know the Fibonacci?
No. What's the Fibonacci?
It's this thing here. It allows you.
So what's that?
What's that
used for, sir?
You can see the numbers here. So for us, we only use it to divide the range. Okay, divide the range. So this range here. So this low and this high. If I mark the high, mark the low. So if I take the Fibonacci, I can divide this in half. Okay, I use it to divide it in half. It's like a ruler, divided in half.
Okay, so it kind of marked where the break of market structure.
No, not the BMS exactly. We are just marking the range. I'm trying to divide the range into half.
Okay.
So why am I doing that? So that the lower half is what you call discount. The upper half is what you call premium.
Okay.
Right. So what is discount? It means low price, right? Low prices. So whenever the banks are buying, they always want to buy low in discount. So whenever you are also buying, you need to mark your range and divide in half so that you wait for price to come down to discount and you buy in discount. So they are buying low, we also buy low.
Okay.
Yeah. So whenever the market is going up, they are always buying in discount. So when price goes up and breaks structure, this is a BMS, right? And you have a new higher high, this, and this is the old higher low. If you divide this new range in half again, This is your new discount and your new premium. So you wait for price to come down to discount to buy again, and then BMS here. And then you have a new range, this new high, new low, new 50%, new discount, new premium. Price comes down to discount, you buy, then price goes up. So we are always buying in discount.
Okay.
For example, you see this low here, this one,
Yes.
and this high. If I take this low and this high, you see the price came below the 50%.
Yes.
Yeah, so they came to discount. Let's look at the new range, this one. This low and this high. Price came down again below 50%.
Okay.
To discount, to buy. So most of the time when we are going up, we want price to come down to discount. So I would say about 65% of the time, price will come down to discount. The other 35, they won't come back.
Okay.
There are sometimes where they don't come back. Okay. So what we are doing is we are just studying the footprints of the market, the footprints, how the banks are moving the market. Then we buy and sell. So, but there's still a lot of stuff that I'm going to teach you a lot. And then for the downtrend, low, high, BMS. So if you take this high and this low, again, if you divide in half, somewhere here, this is your premium. This is your discount, right? Okay. So premium what means high price. So whenever they are going down, price moving down, they always want to sell in premium at high price. They are not going to sell in discount because the price is too low. So they're going to push price to premium, then they sell. Then price breaks market structure here, and this becomes the new range. This is the new lower high, a new lower low. Again, divide the new range in half. Divide it here. Okay, so which means this is all the old stuff. So this new range, this becomes the new discount and the new premium. So now you wait for price to come back to premium, to sell in premium. Above the 50%, then price comes down. And that's just like that. That's how they are moving in a downtrend. So in a downtrend, you sell in premium. Okay, let's look for an example. You see here. If you take if you take this high and this low, price went past the 50%. It went above. So they were going to premium. So this upper 50%, that's our premium. The lower 50%, that's our discount. So as you can see, price went to premium to sell. Let's look at the new range. This high and this new low. Again, price went above the 50%. They were selling in premium. They sell in premium. Again here, but this one is a bit different. Price did go above, but I'll talk about this in the future. So in a downtrend, we want to sell in premium. We sell in premium. Then in a range, price moving sideways. When price moving sideways, there's a slight difference. High, low, high. This is the high, the low. So how do you know it's a range when price makes a higher low and they fail to make a new high and they start to do this? So in a range, what do? You take the Fibonacci, divide in half. Okay. Then you divide the premium in half again. In half. Then divide the discount in half again. So now what you want in a range is you want this upper 25%. and this lower 25%. So this is what you call our dip premium and our dip discount. So only in a range, only when price is moving sideways, we only buy, we only sell in dip premium and buy in dip discount.
Okay.
Dip premium, dip discount. In between here, you don't do anything. Why? Because they like to do this in between here. So wait for price to come to dip premium, then you sell. Dip discount, you buy. Dip premium, you sell. Dip discount, you buy. Okay. So in an uptrend, you buy in discount. In a downtrend, you sell in premium, but only in a range. It's a bit different. That's where you buy in dip discount and dip premium. Okay.
Okay.
So where are those ranges? For example, I think I can. So do you see this? This was a higher high, correct?
Yes.
A higher low, correct? Is this a BMS?
No.
No, it's not. So it's, you can't even write higher high here. And this the BMS was here, right here, right here, and this becomes the new higher high. So if you take this high and the old higher low, and you divide in half, I think if I would estimate the half is somewhere here. This is your discount. This is your premium. So as you can see, price came down to discount to buy. We buy here. And this is the new higher low. Price goes up and they break market structure here. So when they break market structure, we can't use the old range. Our new range is this higher low and this new higher high. If we divide this in half, I think it's somewhere, somewhere here. Yeah. This is the new discount and the new premium. Price came down to discount, you buy here. Then price goes up and they break market structure here.
Okay.
Yeah. So this is the new higher high and the new higher low. And you divide in half here. This is the new discount and the new premium. So you wait for price now to come down here, then you buy, then price goes up.
Okay. Sir, do you mind if I could get something real quick? Hold on.
All right.
Hello, sir. Sorry.
No, it's okay. So let's look at the other example. Yeah, this one. So again, if this was the lower high and this lower low, if we divide in half, I'll say somewhere here, Price went to premium to sell. Then price broke market structure. This is the new lower high, the new lower low. Divide this in half somewhere here. Yeah. Price goes back to premium to sell. They're selling high. Price comes down, breaks market structure. Our new range is this lower high and this new lower low. This was the old BMS. If we divide this high and this low in half somewhere here, this is your premium discount. Price goes to premium, we sell. So as long as we're going down, we are selling in premium. Price comes down, breaks market structure here. The new range is this lower high. Let me change the color. This lower high. Yeah, this lower high and this lower low. If we divide this new range in half, somewhere here, I would estimate, again, price goes to premium above the 50% to sell, then price goes down. So as you can see, majority of the time, price is going to go to premium and also discount.
Okay. Sir, I have a question. See, like where there's a 2-week on, let me see, 1, 2, 3, on almost on the third column on the right. There's the high wick and the lower wick.
This one?
Yes. So since the top, the long wick on the left side,
this one,
it didn't create a lower low to break it, that won't consider as your high. So that you will consider the next week.
Yeah, this one. Yes.
Okay, got it.
So this will be the lower high. So remember, in a downtrend is lower low, lower high.
Okay.
In uptrend is higher high, higher low. Higher high, higher low, higher high, higher low. In a downtrend, lower low, lower high, lower low, lower high, lower low, lower high.
Okay.
And the last one is where's the range? Yeah, this is the range. Price is moving sideways, right? But this is what you call a clear range. Why is it clear? Because you can see these small structures here, low, high. The big range is this. That's the big range. So inside that range, you can see that there is clear lower low, lower high, lower low, lower high, lower low, high, low, high, low, high, lower low, lower high. There was a range here, and then lower low, lower high, lower low, higher high, higher low, higher high, higher low. So this one is a clear range.
Okay.
Okay, because you can see the clear structures inside. Whereas if you look at the next one, this one is not clear. Right? It's just moving like this. Okay, so the most important thing here is what? This high and this low. This here and this. As long as they're not breaking it, we're in a range. This was not a BMS, not a BMS. These are not BMSs. So price is moving sideways here. This is not a clear range. All right. The next one, again, not a clear range also, just moving like this, up and down, up and down. This one is also not a clear range because it just moves up, down, up, down, up, down, up, down. Yeah. Not clear. This one is a combination of two. It's a combination of it's clear and also unclear sometimes. Here it was clear, not clear. Here it was clear right here, then not, then here it was clear. So there was a combination of two. That's the range.
Okay.
Just give me 1 minute. Give me 1 minute.